Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about 3 ways you can improve your trading mindset immediately. Now, we know that when it comes to trading, having a good trading strategy is only one part of the equation. An equally important part is actually your trading mindset. Because if you have a weak trading mindset, you might find that you are not letting your trading strategy work to its full potential. For example, you might have a trading strategy that requires you to put your take profit a certain distance away and your stop loss a certain distance away. But if your trading mindset is weak, right? When you see prices going towards your take profit, for example, right? When you see it going towards your take profit and you start to panic, right? This fear of loss kicks in, right? You're thinking, oh man, right? Price is just about it's 50% to its target. Should I maybe take off part of my position? Should I close off part of my profit first, right? So that I at least lock in some of my profits, right? Those questions start going through your head. Right, and just answering that particular thought that you might have, right, is that if you do take out part of your profit, it ultimately affects your risk to reward of your trade. It affects the profit factor of your trade, right? It's the same thing when you are seeing the trade go against you, right? It's going towards your stop loss, You're looking at it and you're like, oh man, I just need to nudge my stop loss a little bit further away. Bit by bit, maybe I just need to give the trade that little bit of breathing space so that the market might turn around and I might go back into profit, right? All these thoughts, all these small little adjustments you make ultimately affect the profitability of the trading strategy. So today, what we're going to do is we're going to introduce 3 simple things you can do, right, to instantly improve your trading mindset and rather your trading psychology. Right, and the first thing is that we adopt a rule called 3 strikes, you're out. Okay, the 3 strikes, you're out rule basically means, right, when you start your trading day, anytime within your trading day, if you have 3 consecutive losses, right, you stop trading, you take a break, and you come back tomorrow. The reason for this is that when you have 3 consecutive losses, your mind goes into a sort of revenge trading mode, right? Your mind goes in revenge trading mode and thinking, oh man, I made 1 loss, I made 2 losses, I made 3 losses. I need to start making up for those losses, right? And you start looking for additional trading opportunities where they might not exist, right? Try to you might even find yourself getting into larger positions just to cover the losses you made in your previous 3 trades, right? And we realize that from 3 onwards, right, things start to spiral downwards because we start to compromise on our trading decisions, right, on our trading conditions, right, and we start to have a little bit from an emotional point of view, it starts to feel a little bit more intense, right. It starts to feel like you could start moving. It's a very slippery slope from the 4th trade onwards. You might go down the revenge trading mode and might blow up your account completely. Right, so we have this simple rule that there are enough trading opportunities in the market. If you stop trading for the day, right, it doesn't mean that the market say, oh, sayonara, right? You've stopped trading for a day, no more trading opportunities for you tomorrow, right? It doesn't exist that way, right? When you stop trading today, the market you'll still come back tomorrow. There'll still be trading opportunities tomorrow, right? And you can take on the market again. Okay, so that's the first rule, right? Is that once you have 3 consecutive trades in a day, which you have lost, right? Stop trading, come back tomorrow. The next rule we have, it's pretty similar to what we just covered in our previous podcast on not having a daily target, right? This is so important that I'm going to mention it here again. Although if you have not listened to the podcast, please go listen to it, right? The concept here is that you should not have a daily target, right? Don't have a daily 100 pips target or 1% target, or like I want three trades to be profitable in the day, right? Do not have a daily target, because when you set a daily target, what happens is that you start compromising on your, maybe for 80% of the day you might be okay, But towards the tail end of the day, you start looking for opportunities. You start compromising your entries. Just look for those additional trading opportunities that will help you hit your target. You have 8 trades that are profitable, right? You are looking for 10 trades. Your target rather is 10 trades. Then you start looking at the market. You start looking at the screen and you're like, man, I just need another 2 more trades, right? Another 2 more trades and I hit my target, right? And therein lies the problem, because you start, if the trades don't jump out at you right away, something is wrong, right? You know that the best trading opportunities present themselves to you, in an almost obvious way, right? Look at it, it's like, yeah, it's there. But if you find yourself, like trying to squeeze out trading opportunities, like I don't see it on the 4-hour, you know what, maybe I'll go into the 1-hour chart and see if I can see anything there. Maybe I throw on another indicator, right, which I've never used before, right? All these things to squeeze out that 1 or 2 remaining trades, or that 1 or 2% that you're looking to make in a day, right? Those are the things that really affect your trading profitability, right? So, and of course, I don't need to explain how it can lead to a slippery slope, right? You have 8% for the day. You're trying to push for 10%. You compromise your entry. You go to 7, and you're like, crap, right? Let me just at least make it back to 8, right? Then you compromise again. You go down to 5%, and you go like, okay, you know what? Hail Mary, I'm just going to go for a full 10%. You risk 5% on the next trade. Boom, you're down to 0% for a day. You start cursing and like, oh man, I should have just stopped at 8%. And you try to at least end the day positively, right? 1%, and you start making losses. And then, that's where it becomes a slippery slope. You get so emotionally charged. It's 2 a.m., you're tired, your family's sleeping, your dog's sleeping, right? Or maybe your dog's not sleeping yet. I don't know if you have a cat, maybe the cat is not sleeping, right? Just looking at you and like, hey, maybe you should stop trading, right? All because you were looking for that last 1 or 2 trades to help you hit your target for the day. This target which you unreasonably, arbitrarily set for yourself, right? So that's the second rule. Don't set a daily target for yourself. And the last tip that I would like to share with you guys is that you have to learn to trust the process. Okay, you have to learn to trust the process. Basically, be committed to the process without being emotionally attached to the result. Okay, what does this mean? Right, imagine if you have a trading strategy that says that, all right, this strategy, right, has been back tested, right? I've tested it and it has a 60% hit rate. Although it has a 70% hit rate, right? Out of 10 trades, 7 of them are going to be profitable, 3 of them are going to be losses. Okay? Now, you need to understand the law of large numbers, right? This occurs over many trades, not over the next 10 trades. Okay? So when you start trading, right, and you take the first trade, you use this new strategy, take the first trade and use a loss, right? Then you take another trade, yeah, it's a gain. You're like, okay, it's not that bad. You take another trade, you lose. You take another trade, you lose, right? In this kind of situation, you might be tempted to, oh man, is there something wrong with my trading strategy? Do I need to tweak it up a bit? Do I need to throw in some additional indicators? Do I need to use my intuition a bit, right? What do I have to do? You start getting emotional, right? You're like, oh, okay, this strategy is supposed to have a 70% hit rate, and I've already got 3 losses, right? And you take the next trade and you got a 4th loss, right? Assuming you haven't exercised the 3 strikes you're out rule, right? And you start thinking, this hit rate looks like it has a 20% hit rate instead of a 70% hit rate, right? Maybe I should just dump the whole strategy and just look for something else. And this strategy has been something you've been working on, you've been researching for the longest time, but the moment you put it into action, right, in the first 5 trades, you decide to give up, right? Because you're just thinking, it doesn't make sense, right? It's supposed to have a 70% hit rate, now only has a 20% hit rate. Right, so the first concept which I just mentioned earlier, you need to wrap your mind around this concept of the law of large numbers. It's a 70% hit rate. For example, for this strategy or any strategy that you're using, right, it's over a law of large numbers. It's not over 10 trades. Over your next 10 trips, over 100 trades, is over 1,000 trades, right? So you need to trust the process. Imagine, right, if you go into a casino, right, right, you go to the roulette table. So a roulette table, usually you have about a 48% chance of winning. Let's just say you bet on, You know, roulette tables got those black and red, black and red, black and red numbers, right? Let's just say you go and bet on black, right? You have roughly a 48% chance of being correct because there is an equal number of reds and there is maybe one or two greens, right? So the house, basically the casino, has a small edge over you. They have a 4% edge over you, maybe, right? And when you start playing the roulette, you start playing roulette, right? Imagine your first 5 times you bet on black, black came out, black came out, black came out, black came out, black came out. You got 5 consecutive rounds where you won. Do you think the casino owner will suddenly come down and say, whoa, I think you need to stop playing roulette. Guess what, guys? We're going to close roulette for the day. They don't do that, right? They know that you might win the 5 rounds over the short term, but if you play long enough and if everyone combines and play roulette long enough over the law of large numbers of maybe every day, maybe like 1,000 or 10,000 people play roulette, they're going to win. But they need to trust the process. They know that 4% edge they have over the market, or basically over you guys, will play itself out in the long run and they'll be profitable. Because have you ever seen an unprofitable casino? Right, most businesses take 3 to 4 years to break even. Right, casino takes about 3/4 of a year to break even. Right, that's because of how profitable it is, based on purely statistics. So when you have a statistical edge over the market, you know that you can win the market. You know that you just need to stick to your strategy. Right, you need to trust the process. I have you can think to yourself, I have a 20% edge over the market. I got 30% edge over the market. Right, I just need to trust the process. Right, without being emotionally attached to the results that you're getting in the short term. Okay? Anyway, guys, that's it from me for today's podcast on building a strong trading mindset. Do remember to subscribe to our podcast, as here at IronFX, we're dedicated to bringing you the very best trading education to take your trading to the next level. Until then, stay safe, trade safe, and peace out, guys.